taking the lead and addressing the audience of this webinar. So, so I've been in banking and financial services industry for almost 15 years now, and I've interacted with clients face to face. So I kind of can say with some degree of certainty that I can see what makes people take emotional decision, as Goelji was speaking, and what makes them take impulse decisions regarding their finances. So I'll just so pandemic or no pandemic, COVID or no COVID, I would urge everyone, senior or juniors, especially in terms of spending the money, whether for investments or for any other even household expense or luxury expenses. You should always.
Hi Ashish, if you can be louder, please.
Am I audible now?
Actually, very feeble. Your voice is very feeble.
Is it okay now?
It's still, I mean, less. If you could come closer to the source, that will help. Ashish, if you can be louder, please.
Is it better now?
Actually, very feeble. Your voice is very feeble. Yeah, it is better.
Okay, it's better. Okay. So I'll just so in terms of expenses, whatever your expenses you're planning to do, or you're taking to take on some investments or any upgrade of car or household also. So pandemic or no pandemic, I think if we could summarize everything what I think and what I think Goelji also was trying to say is that we should categorize our decisions based on needs rather than wants. So we have to categorize them in these two categories: wants and needs. So one thing is wants. Under wants, you might want to have a car upgrade or home makeover or second or third home or holiday home, whatever. But is it really needed, especially in times like these? That is a question that you need to ask yourself and discuss amongst your family also. So, and ultimately, I'm sure you also feel that multiple spending on the various products that we have has to a great extent impact on our environment also. So we should take lead and categorize our expenses and believe more in recycling and those things. So coming to managing finances in the COVID-19 scenario. So the pandemic has hit the world economy and the global economy, Indian and including the Indian economies, really hard, and it has changed the way the world economies work and think, and even the governments how they work and think. Especially, so if I can just talk about the industrial impact that it has. So the industries or companies which had huge dependence on the customer mobility or employee mobility for that matter have been hit the worst. So transportation services, fitness centers, hospitality services across the world, they have been hit very, very hard. Tourism industry, they have taken heavy losses, and in some cases they have closed down permanently also. And a lot of businesses and companies have been compelled to reduce their workforce. I'm sure some people have suffered this or working under tremendous pressure currently in their companies under the new circumstances which have arisen. We have, after the industrial impact, we can see the technological impact of COVID-19 also, which has kind of necessitated this social distancing and work from home businesses, which has posed immense challenges to the companies in terms of information technology and tech setup which they have to do to upgrade systems. Actually, it has fast-tracked a lot of changes that companies or governments were planning to do 5 years, 10 years hence. COVID has kind of fast tracked all those changes. Some are good, some are bad, so only time will tell. But in many cases, a lot of companies and governments have to do total.
Excuse me, sir.
Yes.
Could you please bring the mic a little closer? The audience are not able to hear you clearly.
Is it better now?
Yes, sir, a little.
Okay. So, so in many cases, the overall information ID cell of governments or companies had to be overhauled. And then third, we come to the consumer behavior impact. So a lot of people, including myself and yourself, we have seen change in the buying patterns and spending patterns that we have seen over last 6 months after the COVID. So actually, one thing we can see very clearly is that the April, May, June months of lockdown, at least in India and in various parts of the world also, it has shown us very clearly what exactly we need just to survive. Earlier we had a conception that we need so much money to survive. We won't have the social status in those terms. But I think in COVID times we have seen how much we actually need to survive. So I think that has shown us the mirror, and it again reiterates belief that what we actually need should be spent rather than on the wants. So the basic thing I think in this area, after all these changes that has taken place after COVID, is that we should keep ourselves updated about whatever is happening in our industries, in our fields, in our domains. We have to keep doing some crash courses. A lot of reading has to be done all the time on the relevant topics of our industry or our products, of our job, of our business. So a lot of new features are available to us in this day and age of podcasts and videos and interviews and courses, which can keep us abreast of whatever is happening in our fields and domains, so that at least whenever the things stabilize, and which they have started to stabilize, so whenever things stabilize and water settles, we are ready to take the opportunity whenever it comes. And opportunities, they come all the time. So we just have to be ready, keep ourselves ready. So in those terms, keep investing in yourself is the best thing that we can do at any point in stage in our lives. So that would be the first step. Invest in yourself, in your body, mind, and your environment. That is the first and foremost thing that you can take care of. So, Amit, after the pandemic has hit, we have to take a lot of strong and difficult financial decisions of what has to be spent and what not has to be spent on. So, again, we have to look at with the lens of want and need. Our minds and thinking are all full of biases that we should be taking this decision or this investment is better. My friend or my uh, the TV presenter is saying that this investment should be done. So we should all do a very analytical thinking of whatever the investment options are available to us as individuals or as companies. They need to be rethought and discussed extensively in terms of removing our biases. So what I might think for an investment, so my friend might think exactly opposite, and his view might be right in today's day and age. So we need to discuss a lot, and we need to read a lot about these things. So any impulse buying can be avoided, should be avoided at all times. So a lot of these e-commerce businesses, after they have come in, they have kind of many fold over increase the impulse buying. But if that can be curbed, I think a lot of expenses can be curbed. Unnecessary car upgrade or home makeover or home upgrade, expensive or luxury items on clothes or watches. I think those things should be avoided, should be postponed at least in the current times for next 12 to 24 months. When the things stabilize, if you have the resources and if you can afford it, it would be good. You can afford then. But at least at this point in time, the priority should be maximum savings should be done for you and family as a whole, and the money should be invested as Golji was also saying. intelligently rather than just taking an emotional decision on some any investment option that is available. So, in case in case someone has resources to invest at this point in time and where they should invest, I would suggest that uh, one should look at their own risk appetite and in terms of what they can afford to invest in those instruments. They may be property, they may be real estate or equities, common stocks, ETFs. So, what portion of their total wealth are they comfortable in investing volatile asset class, which in which capital might go up or down? At this point in time, any investment which comes with a lock-in or very rigid conditions of liquidating, like real estate or very structured or jazzy structured products or bonds or AIFs that come with the 3-year, 4-year, 5-year lock-ins. I think those instruments should be avoided or at the most capped at 15 to 20% of your overall wealth. So at least 80% or more should be in such instruments or uh, avenues that can be liquidated in reasonably short period of time in case you might need money for any emergencies or you need to divert some amount of money from one investment to another. So money should be at your disposal and it should be working very efficiently for you. And for that, you need to have access to it. And to have access to it, it should not be locked in for a long period of time. So according to your age and in what stage of life you are in and your family, you need to take call accordingly. Mostly the investments should be done in equity in large cap and blue chip companies or funds or ETFs should be preferred, especially in today's day and age when a large company is becoming larger and they are usurping the smaller companies and buying into those smaller companies. We can, if one has to invest in fixed income or bonds, one can invest in AAA rated corporate bonds and government bonds and just avoid for any few basis points of extra yield, extra interest. You should avoid any credit risk, any big risk on the money, as we have seen in India with the Franklin Templeton episode in March 2020, where almost $7 billion of investors' money was locked in, and as the Franklin will pay it off when they get the money from their lenders. So I think safety and access to money is foremost importance at this point in time. And if risk has to be taken, it has to be taken on a very small portion of your money, and it should be a very well calculated risk.
Could you just speak a little louder?
Is it okay now?
Yes, sir, it's better. Thank you.
Okay. Uh, so this was on the investments. I'll not go in detail into individual investments, but I have given the overall view where you should keep your money and how it should be parked. So a big decision for a family and parents all the time has been to send their children for higher education in overseas. And whenever that decision comes, that expense on that particular goal goes up by 15 to 20 times. You know, in India, if you are giving X uh, for a postgraduate degree in engineering or management, so it goes up almost by 15 to 20 times if the person opts for Europe or US universities. So this would be one arena where my I would limit my comment because this is not exactly my area of competence. This is a family decision that one should take, and if uh, the option is available, the education and the expense should be done in your home country uh, rather than spending almost a crore in INR in Indian rupees overseas in Europe or US degree. Lately, in fact, even after COVID, a lot of US and European universities have started online courses on various subject topics and discipline, even on vocational discipline. In fact, I did one from Harvard online course. So they are giving these beautiful courses on various disciplines, on various religions, on various scientific topics, architectural topics, and they are not more than they are done in 15-20 days, and they hardly, some of them cost nothing, and hardly some of, they have a very nominal fee. So I think things like these, where I think mentor Mitr can play a huge role in identifying such areas where person get value added education as well as a degree and a certificate, and it doesn't also cost much, and it comes from a institute of repute from Europe or US. I think that would be a great pain point addressal that could be done in today's day and age. So COVID has also given ways to a lot of industries to, if we can say, fortunately, flourish in these times. So due to COVID, a lot of industries have benefited a lot, especially healthcare, as we can see, for the obvious reasons, is emerging as the biggest beneficiary and differentiator in the post-COVID world. Matlab, uh, how sustainable that would be in future, that remains to be seen. But even if now, after COVID, if the global economies, both countries and governments, they don't take cognizance of this fact that healthcare needs to be improved, and all the masses have to have access to this facility of basic healthcare. I think no one knows when we can do that thing. Tech and IT industry is another big beneficiary of COVID. It has also fast tracked a lot of changes that this industry itself had to see, and what it has to offer and do value adds in various other industries like healthcare itself and banking and all the other industries that they are part of, tech and information technology industry. It would be omnipresent in all the industries going forward. That for the foreseeable future, is what we can see, and that can be seen from the emergence of Google and IBM, Microsoft, and Amazon in globally. So, and they are usurping the small companies. So, as I was saying earlier, the bigger companies becoming larger and larger. As you can see, even in India, if we were to see how the shift of business is taking place, a company called Reliance Industries has been in the business of oil refining, oil and petrochemical business and refining business for last 25-30 years. But in last couple of years, especially in the post-COVID year, ironically, they have taken the huge shift from their core business line to telecom and data services business, IoT, Internet of Things, and retail. There are two companies, Reliance Jio and Reliance Retail, and it is taking on the likes of Amazon now in India. So so that indicates the kind of shift that is taking place in what is to come in next 10 years or 20 years, how the which industries would do well, which companies will do well. So that shows ki if the biggest company in India is taking this decision of almost diversifying into non-core areas where it was not present in last 25-30 years. So that shows ki what is to come in future. So R&D sector has got renewed interest from pharma drug companies and governments. So this area should also continue to attract new scientists and investors as well. So I think these industries and themes should be on the watch list of the potential investors and potential people who are planning to work in future, let's say next 5 years or 10 years, where you wish to work. So I think you can see a trailer of where you could work in these companies if you read more about these companies at your end. So with along with this, the huge shift that has taken place on how you transact and spend money and invest money has been the way the online shift has taken place of digital banking and doing transactions online. That has increased many fold, at least in India. Uh, Before COVID, there was a lot of people used to do their physical banking by going to the bank branches, withdrawing cash from the ATMs. But after COVID, the online and digital payment businesses, they have increased many folds. So fintech is also one industry to watch out for in next 5 10 years. Banks are shifting their big, huge payments businesses like HDFC, where I work, and ICICI. They are also shifting their businesses on the digital platform, and huge transformation is taking place with respect to the IT and overall systems that the banks have. Plus, this also comes with the risks. So one should be very wary of any communication that you get from your bank or financial institutions regarding regarding any OTP, any passwords, any data sharing. Always look that with a lens of suspicion. Do not always check the email IDs. Always check the credentials from where the message or the call is coming from, and take your privacy with respect to your finances very seriously. A lot of frauds and a lot of risks have increased and have taken place after COVID. Uh, in fact, there is a series in India on Netflix. Jamatra is the series wherein few young individuals based in hinterlands of semi-rural areas of India, they make calls to the bank customers, and then they